With the dust finally settled on the 2025 Canadian federal budget, we've got a clear idea of who are going to be winners and who are going to be losers. Today, I've got 5 stocks for you that I think are going to be big winners. Each of them is in an industry that benefits in a different way from this budget. We're either talking new investment, new tax incentives, new opportunities, or new regulations, and each of them are going to definitely become more profitable in the next 5 years than they have been in the last. Now, before I do dive into those 5 names, I want to give some general thoughts on the budget. And while I'm not going to make this into a budget good, budget bad kind of video and give sort of a political take here, I am going to say that it's pretty clear that we have this sort of general sense of the federal government trying to drive investment into key industries. And I think because of that, it makes a lot of sense right now to be a stock picker in Canada, because there are going to be certain industries that benefit an awful lot more from this than others. There are going to be some industries that are actually probably hamstrung a little bit by some of the things in this budget. And so picking the winners makes a lot of sense right now. And while a lot of folks love to just toss stuff into an ETF and maybe you're looking at a TSX 60 or something, I think right now actually picking a couple of key stocks, maybe even in addition to your general ETF-based portfolio, does make sense. I mean, that's what I'm doing personally in my portfolio. And so far, it's been going pretty good. The first winner on the list today is Pembina Pipelines. If you don't know these guys, they're a midstream company, definitely at the forefront of all this new investment into things like natural gas. They've been at the forefront of the AI data center story in Canada. They're at the forefront of the LNG story with their Cedar LNG partnership. And importantly, they saw a huge deal struck just hours after the budget was announced with Petronas. This is a 20-year deal. It's a million tons per annum, which is just a huge amount going from Cedar LNG to Petronas. It's going to serve as a huge source of long-term free cash flow for these guys, hugely benefit from it. But they also benefit from all the incentives going towards investing in clean infrastructure and clean energy. Now, the Cedar LNG project is one of the lowest carbon energy projects that there is. We're talking a partnership with the Haisla Nation, right? They're checking every single box that the government is looking for. They're definitely going to be a winner. We'll see how exactly the tax incentives work out for them. That could be a massive one-time boost to their free cash flow. Again, we'll see when it all sort of irons out. I don't know that the accountants have really gone through and seen exactly how much money that could be. But from what I hear, folks I've talked to, people are pretty bullish. They think that companies like this, like Pembina, and of course, you can look at some of their competitors too that benefit in different ways, but they're going to be a huge beneficiary. They're also going to be a huge beneficiary of the AI story here in Canada. Like I mentioned, they're at the forefront of the data center story. We see money flowing into some sort of sovereign cloud here in Canada. These guys are working with not only hyperscalers, but now they got the potential for massive Canadian-based data centers getting built by either the feds or by Canadian companies. So that's another huge growth vector for them. On top of that, it is a really solid midstream company. We're talking a classic, either it's a TFSA or an RSP stock, right? You throw it in there, you collect that free cash flow, in the form of dividends, sometimes buybacks, sometimes special dividends, whatever it might be. And then you either reinvest it or you just live off it, right? It's one of those companies really, really awesome in a portfolio and my number one winner from this new budget. My second winner is sticking with the story of natural gas, and that is Tourmaline Oil. Now, I've talked about these guys an awful lot, but specifically, these guys are going to benefit from some changes in the emissions rules and some changes in the regulatory framework around oil and gas. They're also going to benefit from incentives towards investing into lower carbon energy because they've made some moves towards that. They've put some money forward. They've been investing a lot. Like I'm talking a significant amount into infrastructure. And so these new tax credits coming forwards are going to actually make a significant difference. Again, we'll see once the actual accountants get into this, what exactly that is, how far that moves the needle. But I think you could see a shocking amount of benefit to a company like this. And you might not be thinking of a natural gas company as a big beneficiary from this, but these guys are at a key position. Again, when we talk about Pembina Pipelines being this, forefront of the AI data center story, well, who is going to supply them with oil? Who is going to supply them with gas? Who is going to continue making those midstream businesses such an awesome, profitable company to hold? It's companies like this. It's like the great upstream companies. They're also at a huge scale. They're the number one natural gas producer in Canada, which means they're a little bit more protected than the smaller players who we've already seen Americans start scooping up smaller players up here. Specifically, we saw New Vista get bought out. And so seeing a company like this, these guys are probably more of a long-term player. I think that their benefit is less so right now. Again, we'll see what the tax credit story looks like. That could be a one-time boost and that could send the stock up in a sort of shorter time frame. But I think these guys actually just had their runway elongated by this new budget, right? By the removal of the emissions cap, by new rules about climate competitiveness, new rules about what the benefits are going to be for companies like this to invest in new infrastructure. All of those things all put together look like a better, longer runway, which means longer term free cash flow growth, which makes a company like this much more attractive to hold. They also have a huge amount of resource, which means that they're already built for the long run. And so owning a company like this over somebody who's maybe more of a short-term free cash flow producer makes a lot of sense thanks to this new budget. Third company on the list, and if you didn't see this one coming, I don't know how, it's Brookfield. Now, these guys benefit in a bunch of different ways. Obviously, we have the story of nuclear and their partnership in Westinghouse. But I think the biggest thing is that the number one thing I noticed in this federal budget is the huge amount of investment into Canadian infrastructure. Yes, we're talking maybe new pipelines. Yes, we're talking new LNG facilities. Yes, we're talking about those resource things, sure. But specifically, if you're looking at civil infrastructure, major civil engineering projects, major either municipal or provincial level engineering projects, new highways, rail lines, subways, high-speed rail, whatever it might be, Brookfield benefits a massive amount from all these projects. You also see a huge amount of investment into the grid, right? Beyond just producing it, but also strengthening the grid, being able to move that electricity. These guys are there for those stories. And they are just simply the number one beneficiary from a huge amount of government investment flowing into projects that require a private partner, right? If you think about it, these guys are literally perfectly positioned to be there as a private, funding partner or whatever role they need to serve to get in on all these projects. They also are a huge asset manager, benefit a massive amount from this, and they're, compared to a lot of the financials, pretty hedged against the downside of potentially increased inflation. So I think Brookfield makes a lot of sense to hold. It's also one of those companies that if you just look at the historical performance of the company, you look at a crazy compound growth rate over the last 25 years. You just think about, okay, I can throw this in my portfolio. And even if this budget literally does not move the needle at all for them, they're still going to continue to just make me money every single year. Also, it's a great source of diversification, right? If you're like me and you own, S&P 500 as a big part of your portfolio, you got some of your stock picks. I personally, obviously, I believe in the energy story. I've been looking at that. A lot of folks on the channel definitely aligned with that. Well, you need some other things around that to help make sure you keep your diversification. Brookfield is a fantastic source of that in my portfolio, and I think they're going to be here. So I really do think these guys are going to take advantage. It's not just because obviously they got the tie-in with the prime minister, but I think that this company is just perfectly positioned for an era of new and improved infrastructure, manufacturing, natural resource spending, right? They're going to be there. They're going to win. And I strongly recommend that you take a look at whether or not this could fit your portfolio, regardless of what you think of them sort of from a political basis. The next stock I got on the list is Bombardier. And these guys are absolutely a winner in the defense space. You have seen not only a huge amount of money flowing in from Europe, a huge amount of money flowing in from American companies, but now a huge amount of money flowing in from Canada. These guys are at the forefront where we've seen them in talks to produce, either it's Gripen fighter jets, parts for the F-35, new long range airplanes, all sorts of different products, parts, partnerships. They're just there. And the flow of capital into the space have turned them from, maybe an underperformer to a huge outperformer over the last year or so. And so I think this is definitely one of the more speculative plays, right? You're paying up a little bit for them being this sort of name brand Canadian defense stock, right? If you're looking at them like that. And maybe you are a bigger believer in things like the drone storylines or smaller companies. But I think that looking at a stock like this makes a lot of sense. They're going to win from multiple different angles. Yes, the price is a little bit higher than what I might like to be paying for a stock like this. But I believe personally that there's just more and more flow into this industry. We're looking at another time when this sort of military spend is going to continue to ramp. And I think it's really important to have at least some exposure. Plus, the fact that these guys are a civil aviation company doesn't exactly hurt. I would have loved it if BRP was part of this, because the BRP stock story has been awesome over the last little bit, which is, of course, their recreational vehicles that they split off a while ago now. But really interesting. Might not be something I'd make a core holding personally. This is definitely sort of a speculative play for me, but I do think it's interesting to look at where does the defense industry go. Obviously, there's a lot more interesting small caps if that's your play, but it's just not something that I have dived into enough to be talking about, right? I don't know where the drone story goes, but I do know that these guys are winning from all of the huge spending in aviation, all of the huge spending in military. And so they're going to benefit from this plan and all the money going into it. The next stock on my list is WSP. Now, this is a stock I talked about on the channel a while ago, and I've kind of been a little quiet on. And there's a couple reasons for that. But I do think they're a big winner from this new budget. And they're a big winner because, again, when there's all this money flowing to infrastructure, plus all of these incentives for investments in manufacturing, plus all of these incentives for natural resource extraction, plus a gigantic focus on export capacity, things like ports, rail, energy terminals, nuclear reactors. These guys are at the forefront of that storyline. It's been a massive outperformer over the last little while. And in the short term right now, they've got this big headwind of the US government shutdown. Because obviously, like a lot of these globalized engineering firms, they have deals all over the place, and the US government is a huge source of revenue for them. With that shutdown providing a headwind, bringing the stock price down a little bit, it gives you an opportunity to step in here at a price that I think is pretty reasonable. With all of these huge growth drivers coming over the next several years, if not decades, they've got a fantastic backlog of projects. They are an incredibly efficient company. If you look at the amount that they have returned to investors, if you look at the amount that they have made investors every single year over the last 5-10 years, it's great. And I just think that, simply put, these guys are there for all these big projects. And when money flows into these projects, these guys are winners. And you might have to pay up, but I think it's a huge quality stock that, again, I am so willing to throw into a portfolio and ignore, because I think they will win and win and win. And I don't have to stress about whether or not these guys are going to outperform, depending on, maybe this budget doesn't pass. I wouldn't have to worry about the stock at all, because these guys are outperformers regardless of the environment. They're globally diversified and kind of in the same stream of Brookfield, just from a different perspective. They win from all of these projects around the world simultaneously. And seeing that kind of outperformance gives you a little bit less exposure directly to Canada, while still benefiting specifically from this awesome Canadian firm in a Canadian brokerage. So those are 5 stocks that I think are going to be huge winners. I do also think there's some other stocks going on. I do think there's some other industries that have opportunities, but I do want to leave off with one interesting thought. And this is for all those folks who are in it, who watch this channel mainly for the energy content and who are really following on that story. I think that it's worthwhile being very optimistic right now. If you haven't seen the discourse coming from folks in the sort of consulting / government adjacent spaces over the last little while who are interested and supporters of energy, I think the tone has gotten even more optimistic over the short term. And one of the folks that I think is probably one of the most prolific supporters of Canadian energy is Heather Exner-Pro. And she has done a fantastic job of championing this. You can have your opinions on her as an analyst or the firm she works for, right? But I do think that she is more positive than you might expect. And she's looking for bigger movements, right? Obviously, we got that Petronas move. She mentioned that, but she's also looking towards this Grey Cup summit that's coming up over the next week. Very bullish on that. And she thinks that this sort of budget tees up more movement in that space in the next week. So I would keep my eyes peeled. If you're in it for the energy, if you're like me and you own lots of shares of things like C&Q, Tourmaline, right? These big players, or of course, if you are a little bit down the size chain and you're betting on these like super high free cash flow names that are in this Canadian space, I think there are maybe more opportunities coming. Maybe there's more infrastructure coming. Maybe there is actually some seriously good news coming from this industry. At least some analysts think so. Clearly, Heather has seen that talk going on and she's cautiously optimistic. So that's where I kind of am personally. I'm paying attention, maybe not, rushing out to buy shares today, apart from on dips, of course, but I do think that there's some pretty good news coming down the pipeline. So keep your eyes peeled for that. Now, as always, if you like this kind of video, you like what we talk about here on the channel, please do like the video. If you like covering these Canadian topics, talking about these Canadian stocks, please do subscribe to the channel. And I hope I see you in the next one.